Insurance companies are leaving California and some companies are issuing non-renewals on existing policies. If you're a real estate investor, you need to brace yourself for the big shift that's happening in the insurance industry. Today, I'm sitting down with Garrett Nishihira. He's with AHTKY Insurance Agency, and we're going to review some things that you need to know to make sure you can keep your assets protected and insured. Be sure to watch until the end and like and share this video so we can get it in front of other real estate investors. And without further ado, let's get into it. So I'm sitting here with Garrett. Garrett, can you tell us what's happening in the insurance industry right now?
Yeah, thanks, Cody. So right now, insurance is cyclical. So there's ups and there's downs in the market over an extended period of time. And the ups are called hard markets and the downs are called soft markets. We're currently in a hard market. And what happens in a hard market is that insurance companies, you'll see increased premiums, you'll see limitations in the insurance that they're offering, insurance coverages, and you'll also see the availability for insurance altogether decrease. So it gets really difficult to get insurance. Right now, they're calling this the hardest market ever. It might be the worst it's ever been.
Wow.
We have guys in our office who have been in the industry for 30, 40 years, and it's definitely the hardest market they've seen. And so this definitely happens on a cyclical basis. But as far as the severity of it, it's being called like a generational hard market.
Wow.
It's really difficult.
So what's causing this?
Good question. So what causes a hard market is a number of different factors. You can imagine it's just like any other business. When expenses increase, then the insurance companies have to adjust how they do business. And so I think it's safe in saying that the number one most impactful and largest expense are claims. And so right now, I think anyone can see just by looking back over the last few years, the amount of weather-related claims or situations there's been. Very catastrophic situations. It started with a few years ago with the wildfires. I read that the largest wildfire we've ever had was in 1991, the Oakland Hills fire. And that, adjusted for inflation, I believe caused $2.9 billion in damages. And that's the largest we've ever had. If I'm correct, and you might have to fact check me on this, but two of the fires that we experienced 5-6 years ago, probably around 2015, 2016, those fires were $9 billion and $12 billion in damages. And so the different publications could, provide different numbers.
And was that the Camp Fire and the Malibu fires?
I believe it was one of them was the Camp Fire.
Okay.
Yeah, and so just as an example of what the industry is seeing, wildfires impacted the insurance industry at 3 times and 4 times the largest we've ever had.
Wow.
And that's kind of just the beginning, since then. And so that kind of started, I think that started the hard market. Things were trending in this direction. And we've seen other things. We've seen flooding. Mm-hmm. We've seen heavy windstorms back east. We've seen record-breaking snowstorms, mm-hmm. in the Northeast. And so all of these things, fires here impact other parts of the country, and windstorms that they have on the east, those affect us as well, because to keep it as simple as possible and as straightforward, insurance companies, they go to reinsurance companies, mm-hmm. and those reinsurance companies are basically like insurance companies for insurance companies.
Okay.
And those reinsurance companies, they not only take on fire risks in California, but mm-hmm. they take in a lot of other risk exposures in other parts of the country. And so when the reinsurers are impacted, then it directly affects the cost of insurance for the primary insurers that ultimately we deal with, and your audience, the consumer, the people, the buyers of insurance, ultimately impacts them.
I see. So a hurricane, let's say on the East Coast, could, cause a lot of damage, cause a lot of losses for these reinsurance companies, and that could then drive up prices here.
Yeah, definitely.
Okay.
Obviously, it impacts those regions far greater as far as like insurance premiums are concerned, and then as far as insurance availability. But to think that just thinking about business in general, to think that doesn't have an impact on us, it certainly does. Yeah.
I see.
So weather is one of the major things impacting this hard market. Cost to rebuild, right? The cost of construction, probably a lot of us have experienced, whether firsthand because we remodeled a bathroom or because for some other reason we've seen, certainly your audience can probably has experienced some kind of increase in cost in construction. They and so that has increased dramatically, abnormally increased. The cost to repair cars, the cost to replace cars, right? We're hearing that from the insurance companies that lawsuits have increased, the frequency of lawsuits coming up, the severity of those lawsuits. So the biggest expense of an insurance company is increasing dramatically, and all at the same time. Whereas probably in history, if you look back, and I don't know this for sure, just thinking logically, it's probably rare where all of these factors have hit the industry at the same time. And
Wow.
so that's contributing to like a abnormally, let's call it a generational hard market happening.
Gotcha. So perfect storm of elements that are all hitting the insurance market.
Yeah, that's a very good, good analogy of it. A perfect storm, unfortunately, and this is causing another factor that we talked about is the Department of Insurance.
Right.
The California Department of Insurance. And so, not getting into too much detail, but I think what's important for for everyone to know is that insurance companies, they need to get their rates approved by the Department of Insurance. So in this case, for us, the California Department of Insurance, they approve all the rates. So like if I can make a comparison, let's say you own a restaurant and you sell hamburgers, and the price of cheese goes up or the price of beef goes up, and they can increase their price to $10 for a burger or $12 for a burger, right? But the insurance industry can't just increase it. They have to go through a governing body to be able to get the rate increases they need to sustain. And so, there's not too many businesses like that. Maybe the next best example of that is rent control, right? Like someone who owns an apartment, they could feel like their hands are tied at times, because costs are going up, and they can't freely, in some areas, I'm not super familiar with it, but in some areas they can't freely adjust their rents as they need to,
Gotcha. Okay. So we have the California Insurance Board they're not letting the companies increase the rates like they need to absorb these costs. And so that's where we see some insurance companies leaving.
Yeah, there's definitely the process to do this. I don't know the details of the process, but the process to increase rates, it's been known to be a long process in California.
I see.
And so I think I read that Allstate stated in an article where they announced that they weren't offering property insurance, that it was like something like 700 days they hadn't been able to get approved for a rate increase.
Wow.
Yeah, and that's no knock on anybody. It's just, I think it's important. It helps bring perspective to the insurance companies and what's going on as another factor contributing to this hard market.
I see.
Yeah.
Okay. So Garrett, I know that several companies have left California and just stopped writing policies here altogether. What are some of those companies, and is it possible we could get to a point where there's no insurance companies left to choose from?
Yeah. So, when we got the news that State Farm stopped writing any new policies in the state of California, that's significant. That's huge. That's a real tale of what is or a good indication or a good example of how the insurance market is being impacted and what's happening to the market. When the largest carrier pulls out and says, we don't want any new business, because one thing I can say about insurance companies is, one, they want to be as competitive as possible, and writing new policies is very important to their business. And so when they say that they no longer, where it doesn't make sense for them to write any new policies, that means they're in a really critical state. And so we heard that State Farm did, and then next we heard that Allstate. And Allstate, I believe, is the fourth largest insurance carrier. So number one and number four pulling out is huge. One thing that happens as a result of this hard market is that insurance companies start limiting the amount of insurance that they're willing to offer. And the way they do that is they tighten up their underwriting guidelines. So they put more strict requirements in order to offer it on any given building or on any given building. And so that makes it extremely difficult to write insurance. So even though maybe they're still offering new policies in the state of California, they've limited it so much that it makes it that much more difficult to place insurance. And then we have to go into the secondary market.
I see. Okay. In the secondary market, you're still able to get coverage?
Secondary market, we are able to get coverage still. I would say not too long ago, a couple years ago, whenever on insurance that I happen to provide and the opportunities I've had to offer insurance, so in my experience, once we go to excess and surplus lines, E&S markets, those are the secondary markets.
Okay.
Once we go to those, usually we'd be able to write them fairly easily. Okay. The process is a little bit more involved. Requirements might be more involved, but I wasn't concerned that we weren't able to get coverage. Gotcha. But now, everything that we're experiencing in the primary standard markets, I'm starting to see them in the secondary market or excess and surplus lines market, and it's getting really difficult to find insurance anywhere.
Yeah, actually, this is something I've run into on several escrows recently where we've been shopping for insurance, and we've gone to these preferred carriers, most of who don't want to write policies on anything older than like 1970 or 1980, and then we're shifted into the E&S market. And even there, they have pretty strict guidelines on building condition and even sometimes building age. Is that what you're seeing too?
Yeah, so definitely. Those are what we call underwriting guidelines, right? So like kind of preliminary requirements that they're putting on us as agents to get from our clients and have our clients do in order for that building or that business to be favorable as far as the chances of it having a claim. And so things that we've seen where they put restrictions on are year built, definitely have, in the insurance world, I feel like things happen relatively slowly. And so in a year's time, we went from being able to write buildings that were like in the 1920s, 1930s to those same companies in our world overnight saying we won't write anything older than 1960. And then those with varying companies, those years just started getting newer and newer to 1980s or 40 years old and newer, so those are definitely, that's definitely an example of underwriting guideline that they've tightened up a lot on. I think that the ones that have come up the most and affect our insurers, our clients the most are updates to the roof, the plumbing, the electrical, and the heating. Gotcha. These four major systems, as far as buildings are concerned, have always been the most critical, like underwriting factors. But the insurance companies didn't require proof of those, like permits or receipts. Gotcha. And now they're putting those demands on us in the standard market. So then we go to the E&S market, the secondary market, and now they're putting those same restrictions on us.
Wow.
So it's becoming unavoidable, where they're actually asking for proof. So as far as like you guys are concerned, all the property owners out there, it's really important, which I don't know if historically this had been the case. It's really important that you keep all those records, that you have copies of the permits, and that you have all the receipts and description of the work that was done. All that documentation is maintained.
Right.
And I think going forward, period, it should always be maintained. And then I think this is outside my realm, but when you're purchasing a building, I feel like that's your opportunity to get any documentation that you possibly can from the seller. And I don't know how the sellers feel about that, but you need to let them know that it's strictly for the purposes of insurance, being able to get insurance. And then maybe the secondary is just so that you know yourself as a building owner that when the roof was last updated, when the electrical was last updated, when all four of these things were last updated, because there's a reason why those are most critical to the insurance industry. And it's because these things have led to the most significant claims.
Got it.
Whether they be fire or big water claims.
Yeah. And actually, I pulled some statistics just to give everyone an idea of, building ages in Long Beach. So pulled stats off of Reonomy. In Long Beach, there's 17,233 apartment buildings. And when I say apartment buildings, I mean anything 2 units and up. Of those, 12,567 are 2 to 4 units, and 4,666 are 5 and up buildings. When you break those down by year built, in the 5 and up space, about 695 of those 4,666 buildings were built after 1970. So that's 15% of the buildings that are kind of within this window where you might be considered by a preferred carrier. And then kind of across the board, only 1,644 of the 17,000 multifamily properties were built after 1970. So that's 9.5%. So really 9.5% of those properties are within that window of what the preferred carriers are even willing to consider. So like 90% of people are going to have to go to these excess and surplus lines, it seems like. And even with those, you're going to have to pay attention to things like upgraded electrical, roofs, the plumbing, the heating, like you said. And actually just worked on a recent escrow where we had a 1960s building. It had a new roof. We negotiated, we were able to get the seller to upgrade the main electric panel. It already had like 60% of the units had new heaters. It was in great condition. And the preferred carriers, because it was 1960s, most of them wouldn't look at it. We had one carrier who looked at it, but then said, no, we're not going to consider it because it has tuck under parking.
Yeah.
And we ended up having to go excess and surplus lines. And we didn't have an issue getting excess and surplus coverage, luckily. But it's something that we're definitely seeing more on my end too.
Yeah, there's definitely other things, like you said, like the tuck under parking can be an issue with the preferred market. So there are a number of other underwriting factors as well. The ones that do come up are those 4 that I mentioned, but the tuck under parking is always an issue too. Not only for earthquake, but also they brought up a car running into one of the posts. And then that whole soft story coming down.
Man.
And you don't think about that. You're like, oh yeah, that could happen possibly more often than a big earthquake.
Sure.
Yeah.
Okay. So for people who already own multifamily property in Long Beach, let's say the buildings are older, are they at risk of losing their insurance from one of these preferred carriers when they come up for renewal? Or is that something that they're going to have to pay attention to or watch out for?
Definitely in this market, that's a concern.
Okay.
In any market, it's always a concern that you could be non-renewed. In a softer market, typically it's less likely. But in this market, it's always, it's become a very, it's become a concern even more so because it's become a concern more so, because the market's so scarce. And because insurance companies are limiting the amount of insurance that they offer, then any concern that arises with any building, let's say, they're going to take a close look at it.
I see.
And so it's so important today. Something as simple as paying your bill on time. Insurance companies, once that policy cancels, there's more and more of them who are less willing to take it back on,
Got it.
especially for a building that maybe was once within their underwriting guidelines and they've chosen to still continue to insure it, but now you cancel for non-pay and it falls out of their current underwriting guidelines. You might not be able to, there's a good chance you might not be able to get that policy back or reinstated.
Wow.
And
Okay.
so paying your bill, and we've been telling our clients, whether you receive a bill or not, that premium is still due, and they're not being lenient. The insurance companies aren't being lenient on that fact. And so other things, paying your bill, continuously maintaining your building and upgrading that building is important as well, because the insurance companies will periodically reevaluate a situation. And if they've made major changes in their underwriting enough to where they would reevaluate their book, and that's more insurance companies are doing that today than ever, because it does take time and therefore money to fully reevaluate a book of business and do the due diligence that some carriers think they might need to redo. And so the fact that they're willing to expend those extra resources on doing this process means that the insurance companies are hurting.
Got it. So you mentioned some good stuff to watch out for: the roof, the plumbing, the electrical, and the heating systems. So one thing we run into a lot on older apartment buildings here in Long Beach are recalled electric panels. So I think Stab Lock, Pacific Electric,
Yeah, Federal
or
Pacific
sorry, Federal Pacific,
and
and
Zinsco.
Zinsco. So we run into those. We run into buildings that have these old systems. So like 90% of the time, it sounds like now you're going to want to look at upgrading those. Is that right?
Yes, I would say every time you're looking to upgrade those, because every might be strong, but the reason why is because, let's say for us, for instance, one of the companies that will still entertain writing a building with a Zinsco or Stab Lock or Federal Pacific electrical panel, they'll immediately issue a memo stating that you need to get a professional contractor to evaluate the electrical panel and state that it's in good working order.
Okay.
And so, and some will accept that, and some will just flat out require it to be replaced.
I
And
see.
that particular carrier, they'll cancel at midterm.
Wow.
Yeah.
What about for somebody who owns an older building that might have the original electric panels, but they don't fall within those recalled companies? Like maybe it's, a company that still might be acceptable. Is that Does that come up, or are they still requiring those panels to be replaced or evaluated,
Yeah.
even if they're not like a company that has recalls?
Whenever you go to a new insurance company, write a new policy, whether you're just purchasing the building or changing insurance carriers, the new insurance carrier will always do an inspection. And then so at that time, one of the things that they'll inspect is the electrical panel. And if they feel like the electrical panel is in a condition such that it needs to be looked at or replaced, then they'll make that recommendation. So regardless of the panel manufacturer, it could be that they'll require to replace it or require to have it inspected by a licensed contractor. And so that's always a possibility.
Wow. Okay.
Yeah.
So Garrett, my company deals mostly with multifamily properties. Is this something that you're seeing across the board? So like a single family homeowner, is this something that they need to be aware of as well or worry about?
You know what, the industry right now, like for instance, to use State Farm story as an example, State Farm stopped writing all types of property policies. So that's single family homes and rental properties and commercial buildings, right? So that tells you right there that it's definitely a concern for homeowners as well. As far as experience is concerned, it seems like it's a a little bit less of a concern. Like the insurance companies so far, although many of them have put restrictions on that limit the amount of homeowners insurance that they're actually offering. So it is harder to get homeowners insurance today. But of the ones that are still writing it, the requirements that they're putting on the homeowner is not as strict as maybe as commercial property, but it's definitely, the thought is definitely that it's going to go that way. That this problem that we're having, or the cycle that the insurance market is in, is not at the end of it by any means. I think we're maybe in the middle of it, and so it could get stricter and stricter to find more and more strict and therefore more difficult to get insurance, whether it's a homeowner's or a rental property.
Wow. Okay. And has this happened in the past? I know you said that there have been cycles in the past. What's like a potential resolution to this? Is it something where like Congress gets involved, or is it something where the California Insurance Board finally loosens up and allows these preferred carriers to increase their rates? Or what do you see as like a potential solution to the tight market?
Yeah, I'm not sure if I have enough long-term experience there. I've been doing this for 15 years, and there's a lot of people, maybe more than half the industry, that's been doing this longer than I have and experienced more than I have. But one thing is rate increases. So one, as the consumer, you can expect those. It's a component of this necessary thing called insurance, that is one of the determining factors in the availability of insurance continuing. And as far as anything further than that, there are still insurance companies offering insurance in California. It's still there. There's definitely, I'm sure there's more pulling out of California than maybe any time before. This hard market that is maybe the hardest we've ever seen, is there's probably a lot that maybe a lot of people in insurance haven't experienced and don't know what the real solution is to all this. As far as the thought of what the solution is, and to answer a question that you asked earlier, insurance has to exist in order for our economy to work properly. If you're buying a home or buying any kind of property and you need a loan, no lender is gonna offer that loan without insurance. Really, if you think about it, there's no product like insurance where even the highest amount of premiums where it compares to, or proportionately to, the benefit of that policy, right? You could pay $7,000 for a average homeowner's policy, which would be ridiculous. But if that policy could potentially rebuild your home for up to $500,000 and beyond, or cover a lawsuit up to $1 million, how long would you have to save $6,000 a year in order to accumulate that pot of money, right? That is there for you at the worst time. And so our economy, our financial environment depends on insurance as a safety net for everything that goes on, all the transactions that are made in all industries. And so the smartest people in our country are going to put their heads together to figure this out, and I know that's kind of a really broad statement, but one thing I know about insurance is it absolutely has to exist and cannot fail. So they have to do whatever they can to do that, and so I don't know what's on the horizon as far as the solution is concerned, but I know that it's still, going towards a harder market. It's not getting necessarily better sooner. And I think, day by day, we're kind of taking it. Things have settled down a lot from the earlier part of the year. And so I think that that's where we're at with it right now is that unfortunately it's still a little bit unpredictable, but insurance as a mechanism is so critical to our economy that they have to find solutions for it.
I see.
Yeah.
Man, well, that's a lot of great info. And I just want to kind of summarize things for the people who are watching. So, some things that you can do if you own rental property right now, just to kind of be ready for potential changes with insurance. Take inventory of any repairs that have been done to your building and the condition of those major systems that Garrett had mentioned. So roof, plumbing, the electrical system, and the heating. So those are the big ones. Review who's holding your policy right now and maybe get a sense of whether or not they're potentially going to drop you as an insurance company when your policy comes up for renewal. And also just be aware of the options that are out there. So a lot of people are having to look at these E&S carriers, excess and surplus lines, and understand, what requirements you may run into when you do shop with those companies. So are you for sure going to have to upgrade your electric panel? Is your roof 30 years old and they're not going to touch your building? And maybe budget for some of these capital expenditures in the next few years here, whenever your policy is coming up for renewal. Is there anything else that you would add to that people can do to just be prepared?
Just ongoing maintenance. Like you think that, painting, like part of the underwriting process is the eye test.
Yeah.
If a building looks great, that's part of it, and usually just like I imagine in the building buying process, the property buying process, there's things that you look out for that give you an indication of how well the building's been maintained over the years. Those similar principles apply in insurance underwriting as well. So those things, and when you upkeep the building, I feel like the tenants are more likely to take care of your property as well. And so that is what underwriters think as well. And so that's what they're looking for. So in addition to those major things, there's these other minor grooming and painting and taking care of fascia boards, those kind of things. Those are considered in underwriting, definitely.
All right, good to know. Well, Garrett, this has been very valuable. Thank you so much for coming and joining us today. If you got any value out of this video, please remember to like it and share it so we can get this information in front of other real estate investors. And if you like this content, consider subscribing and checking out some of the other real estate related content that we put out. And we'll see you next time.
Thank you.